The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. On this Monday, the 13th of January, very special day. We're looking at the Dow up 174 at 42,116. I hope that I'll be as clear as I can be. Had some surgery on Thursday. Wednesday, I'm playing tennis. Thursday, I'm in the hospital. It was planned, but for a double hernia, not fun, I can tell you that. I've had others before, and this one was up there. Anyway, I'm going to do the best I can right here. And what I'm looking at is, let me go through a couple of things slowly, one by one. The first thing is, within the context, let me just move this over so that I can see. Yes, okay. The Dow has been the weakest link together with the IWM. So the Dow 30, very special, just 30 stocks, but very important stocks as far as I'm concerned. Get a big test this week because you've got the financials, you've got JP Morgan, earnings coming out, Bank of America. But at the same time, you've got the Russell 2000, opposite end of the spectrum. These are the small caps, and they've just been decimated. But this is absolutely fascinating to me. Look at the daily chart of the Dow. Sell signal goes to a sell mode. The lowercase h goes to the lowercase m. Lowercase m on Friday took out the left side low, and it says that 42, this is all in Chapman wave methodology, 42,146 was the low back in early December. That's the low that says we took it out on Friday. You've got 1, maybe 2 days. Sometimes it go to 3. In this case, I'm making it no more than I'd prefer just 1 day. But I give it 2 days to close above 42,146. That's a start. Right now we're at 42,125. We're under that by 20 points. We have already climbed to 42,154, still underneath that low. That's the lowercase h that goes to lowercase m. It's actually almost like a very big arch formation, dreaded H. So that says, sell mode. Where do you get an actual buy signal? Oh, it'll take a lot to get a buy signal because you'd have to wait for the MACD to cross positive. Look, the MACD histogram has improved a lot, but it's not even close to turning positive. The 914 is very weak. That's the 9-period moving average under the 14, the daily chart. Stochastics at 22%. The MACD's, the on-balance volume making lower lows. I don't see it yet. However, should I do that now or should I wait? I'll do it all together. So the volatility index, so I'm talking about the Dow, I'm talking about the IWM, but I'm jumping to the volatility index. And let me explain why. VIX.X hit, it went from about the 14s a week and a half ago. It had hit 28.32 back on the 18th of December. And I said, that's a false high in the sense that the market was still making decisions about what was going on in this rolling series of corrections in the different sectors. And we saw it drop then all the way to 14. I mean, that gets cut in half. And then what does it do? It goes to peak A, peak B, and then it's tootling along and it's stuck in the 17, 18 area on Thursday. Then suddenly on Friday, it spikes all the way to 20.31. And then because of the overnight weakness, there was some strength. I did my video. I was not able to do it. I managed to do a very short video last night that I sent out. And while I was doing it was just after 6 o'clock. The futures had opened. I said, well, the market's attempting to rally here. But the VIX index, to get it Friday to Monday, and this for those of you who know a lot about the VIX index, you know exactly what I'm talking about, like March the 6th of 2009, the Dow made its low, the S&P made its low on the Monday, and that VIX index was screaming to the upside. Very often that happens. It's very seldom that you get these impulse corrections, reversals, I should say, in the middle of a week. It's usually either a Friday or a Monday or after a holiday, something like that. So my contention is that this is a rally, but not the rally. We wanted to play this rally as a rally, but I am anticipating that because the correction is ongoing, so now I can go back to the other things, that this VIX index, which only went to 22.04, ideally what you'd want to see if there's going to be a rally of more than a week to 2 weeks rather than a really big rally, which I don't see at this particular point, you would want to see this rally now start to fail, that the VIX index doesn't go much below 20, that there is a failure that the Dow, which is now up 114, giving back some of the gains, actually goes to a lower low, and then at about 2:20 this afternoon, another rally starts, and at 3:10, you get a kind of composite where other indices start to join in, and at 3:52 this afternoon, just 8 minutes before the bell, this market is screaming to intraday highs, and the highs go in the futures right through until after the close. That could compensate for what should have been a horrible day today, opening down 370 to 420 in the Dow. The S&P futures are down 60 or more. The composite index, which is still very weak, is down 232, is even much, much lower. And then you get your reversal. That's a major reversal. I didn't see anything in the news or anything that says to me, this is the turn. It's just a turn. And it's a turn that could, if I'm correct in thinking that it's rotational, it could see some areas that have been the weakest have a pretty decent bounce, and then you've got to be careful. All right, I got that out of the way. Let me just run these again. The Dow now is only up 109. I'll give you the parameters I'm looking for. 109, not good enough. I want to see at least a tag of the 42,146 level from mid-December, that low. And I'd like to see it today. If it comes tomorrow or the next day, that's a little late. Meantime, there's that opportunity now to say that was a very weak, from 45,073 to today's low so far, 41,844. We're talking about, what is that, 45, let me just do that, 45 to 42. That's over 3,000 points. So that's 8%. Yeah, that's a pretty decent correction. I've been saying for a while that I'm anticipating an 8 to 12% correction, and that will be the test, because if it gets deeper than that, we're looking at many weeks rather than just maybe even a couple of months of correcting. All right, so that's the Dow. Now let's just quickly go to the S&P, because the S&P is kind of in the middle. It's up. It's down 36 at 57.91. Not acting all that well. Is leg D to the downside. All the technicals are still very weak. Let's go to the QQQ and the X100. Trying to come back from the low of the day, down 5.5 at 501.67. Still very, very technically weak at this particular point, 940. Oh, what I forgot to mention, the whole reason why I wanted to go through that panoply of indexes is to say, hey, look at the 9-period moving average over the 14 in the weekly chart. I mean, that's still fabulous. Look at the S&P, the weekly chart. That's still very good. Not fabulous, but it's still very good. The Dow is a little closer to going negative, but still very strong. Look, it's still above. It's getting there. The IWM, the Russell 2000, has that gone? Yep, today. And the week has just begun. It's not even an hour into the first day of the week. That has flipped to negative. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So I wanted to do this. Where did I put that in the wrong place. ESH25. There, that's it. So the E-mini is attempting to rally. You can see it's a bit of a struggle. There's a peak A, B, C, 1C2, goes higher. Yeah, so it's really important for the E-mini at some point today to at least, it's at 58.32 in the 10-minute chart, to break sharply above the high that was made at 120 this morning when the market tried to rally and then started a big failure for that final slide to the low of 58.09 round number. And we want to see at least an attempt. I don't know if we can do that, but an attempt to break above 58.48. Ooh, a long way to go right now. Oh, why is that? Oh, I forgot to. Oh, come on. Let me just get this right. There you go. It's at 58.35, so that's a long way to go. But most importantly is if it can get into the 58, maybe 63, 58.63 to 65 area, then this 200-period moving average of 58.65 can be reached. And in fact, that 200-period moving average hasn't been tagged until it made that failure back at 8 o'clock. That was on the 7:59 at 1 on the 10th. So, all right. So as it stands right now, this is a good rally attempt, but I need proof. I need proof that the rotation says, yes, you can see certain stocks like, say, a Microsoft be pulling back and others in that category. But at the same time, the really beaten down stocks that are really mostly Dow stocks are able to have a balance. And that to me is really important because it gives you that rotational aspect where corrections occur, but because they aren't in unison, for instance, Friday, everything was coming down in unison. That's why everything accelerated to the downside. You had this waterfall cascade. But when it rotates, it means that you don't go down as deep and that there's something that's finding support. And let me just see, was it Eli Lilly? Yeah, Lilly, Pfizer. There were a couple in the pharmaceuticals, maybe even in the medical equipment. So you can see there's an attempt to find some support in some areas. There's Walgreens, took a huge dive. It just kept diving since it was up in the 60s 2 years ago. And then went all the way down to the 8s. And then it had a spectacular run to 12 on Friday. Now it's pulling back. But I'm looking at this and I'm saying there's a chance. And that's the reason why I said I don't see this as the big one where this is it for the market. I see it as a rotational correction. And if I'm correct that it's a rotational correction, the sectors that were the weakest could find some support earlier than the ones that were the strongest. That's all I'm saying. And it also says that any really strong rally early on this week, if it starts to falter, could turn into a shorting position. So that's the situation. The situation is that the tide is going down. And I'm not going. I want to try to be with the tide. So there we go. That's the QQ. So SMHs is really what I want to get to. SMHs, semiconductors. Look, rectangle formation in the weekly. The 9 is still strong over the 14. The monthly chart looks fabulous. The weekly chart, the daily chart did that double top at 263.58, just above the 262.26 high of October. And it pulled back pretty sharp, very sharply, but it's still within this rectangle. Now, if the SMHs in this next week of January, this week going to early next week, actually closes below 231, let's make it 230. It closed below 230, it's at 243 right now. It says, now you've got more of a problem because now the rotation is starting to take what was working before, NVIDIA, look, same thing, 152.89 high of the 21st of November, pulls back, makes the cup formation, goes right back to where? 153.13 4 sessions ago, less than a point away from its most recent all-time high. And lo and behold, it's pulling back. And this is very important because if NVIDIA, which I think is having a well-deserved retirement for the market for this particular phase, it'll come back, but right now, that's what I'm thinking, is at 131.62, had a low this morning of 129.51. If it takes out the low of the 17th, the 17th of December of 126.86, in fact, if it closes under 125, I think that's become serious because you can't have Taiwan Semiconductor, TWM, is that correct? Taiwan, no, am I wrong? Oh, that's TSM, sorry, TSM, which made a peak D, doji candle 4 or 5 sessions ago, at 222.20 and is now trading at 200. I mean, that's a 10% correction just right there. And it made a leg D in the weekly chart and a leg F in the monthly. That rotation says there's a good chance that the semis are part of this whole thing that says we're correcting and we're rotating. Let's see what a General Electric is doing. I see a little bit of strength in GE. It had made an all-time high fairly recently, under 200 in the 190s, pulled back to the 160 area. Now it's trading at 171. It's got this Chapman wave inside track repellent zone within a down channel. That's going to be really important to crack to the upside. That's just 175. Anytime in the next week and a half would be very impressive if it can do that. Okay, so I got a bunch of things. So WHR right there. Do I not have the notation anymore? This is Whirlpool Core. Monthly chart just starting to rally again. It's in leg B. Leg B. A weekly chart is peak A, B, then an A, B, C, D, E, F. Yeah, doing quite nicely. And then this is fascinating. So Whirlpool, in this environment with the housing sector really taking it on the chin, I'm impressed that it's doing quite nicely. So what did you say? You said WHR, I'm long at 117. It's trading at 118.99. So this is what I'm going to say. The 9-period moving average just flipped positive in the daily chart of WHR. The weekly chart has been strong all this time. And the monthly chart, we're talking about a monthly chart. It'll take a little while. Why is this? Did I do something weird here? Why is it so I had some issues, I guess. All right, so I'll just leave it at that. The 9-period moving average has quite a way to go positive in the monthly chart. Well, let's go back. Yes, so let me put it this way. Whirlpool is on Friday when the market was down very sharply, had a really strong session. It's followed through with a higher high today. That's a good sign. So in this particular pattern, I would look for a cup formation, but there's a lot of work to be done before I can talk about it as right here being very positive. The 9-period moving average has just flipped to positive. The day's young, but that's the daily chart. The MACD is still weak. The histogram hasn't turned positive. But if it's able to get to 121.25 in the next 2 days, I think you've got yourself one that's going against the grain. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, so we're looking at gold. Gold is down to $30 at $26.85. We had mentioned the other day that if it went over 26.85 to 26.88, that would be a very good sign. It did that on Friday. It's giving back some. And as I said before, gold is really in the middle of a range, and it's just kind of, it's almost like the semiconductor, stuck in a range, not breaking down, not breaking up. Look at the GDX. That's a little different. GDX is in the lower range, is making lower lows and lower highs, and that's the gold miners. And to me, I want the gold miners to lead, and then I'm feeling quite satisfied that you're going to get some really good action in the gold. I don't know why, but that's just the way I look at it historically. So this is just sideways action. Look at silver, SI, continuous contract, pulled back sharply today, down 93 cents at 30.37. Weekly chart doesn't look that great. Doesn't look too bad. Monthly chart says, uh-oh, you could be arching over. You need quickly to get to 32.27 in the silver. Here's another thing that I've been talking about for a little while now. I said I think that Bitcoin back on the 17th of December at 110,180 at a peak, G in the Chapman Wave methodology, it made some kind of a top, and that I considered it the chance that it made a daily, the kind of work we've been seeing for a while is that the daily charts have had more severe corrections, and the weekly charts have taken their time, and they've really not participated to the downside. We've just seen that the IWM today, it's a weekly chart, so we've got to wait for Friday at 4 o'clock. So this first hour, you've seen the 9-period moving average in the weekly chart go negative. So we'll see where that goes. But it's the only one in the weekly chart. So it doesn't mean, so the question came in, what's the importance of the 914? Well, the 914 tells you that there's still tremendous internal strength in the Bitcoin in the weekly chart. Look, it's not even close. The green is still expanding above the 14. So the 9 is above the 14. The MACD has turned down. The stochastic has turned down under 80% to 71% in the weekly chart, and they're on balance. But this has held the price, and that's what we've seen over and over again. When you're looking at the monthly chart, leg D, yep, D's are where other things can happen. You've got to be careful. But so far, monthly chart of Bitcoin looks pretty good. So we've remained long. We've kept the long. We got in very nicely for the Bitcoin for the cup and handle. So because we were anticipating that this handle could go to a leg D and be quite sharp, in the IBIT, which we have, the IBIT is the ETF, that only has the handle. And it's gone all the way. I have to call this B because it's a brand new chart. I can't call it anything else than that. But we know that, in fact, it's probably a D in the monthly chart. But the weekly chart fulfilled everything that it needed to do. And it's trading right now down $1.24 at 52.90. And I don't really want to get out of these positions. All our long positions have held very nicely because we got in many cases just off the lows that were made back in either August, October. And I like these positions. So we've taken good profits in small positions, but we've kept core positions. So the question is, when do we add? And I would like to add to them, but I don't want to add too early. So you can see that the IBIT daily has gone to lower lows and lower highs. I could do a 1-to-1 to the downside, which says the 49-ish area trading at 52.47 right now is probably the area in the IBIT. But let's just go to the GBTC, which is the fund. You can see the pattern looks very much the same. This one, A to B equals C to D. This is the lightning bolt pattern, not my notation of the peaks and troughs. That says, 68 is possible. It's trading at 73.15 right now. And the 9-period moving average went negative last week. But the monthly chart, the weekly chart is still very strong in the monthly. So we go one step at a time, and I say Bitcoin is vulnerable right here, at least on the shorter term. Intermediate term is still looking pretty good. Let's go to high-grade copper. High-grade copper trading up over the last couple of days. Well, actually about the last week. Very nice rally from the 4 level to 433, where it's right now, 4.33, up 0.02. This is a good start, and that's the reason why I'm thinking that I would prefer in my overall package that I talk about for subscribers is that we're looking at what's working, should continue to work, but if they've been very strong, they're due for some kind of a digestive phase. What has been very weak could start to form some kind of a base, and high-grade copper is in that category. And that's what we need to monitor, because that's kind of a leading indicator in a way. So high-grade copper has been telling me for some time, since about May. What was the high right there? At 5? That was May the 24th. We May the 24th, it did 5.31. 3 weeks ago, it went to 4. Now it's trying to rally. It's all within this rectangle formation. So it's important that high-grade copper starts to shape up. All right? So I'm just giving you the overall panoply, the big picture. Now, the other thing I want to look at is, let's go to the dollar, DXY. Look at that, new recovery high. All-time high is 114.78 back in September 2022. Comes down very sharply in 2023 to the 99 level. Bounces sharply, then comes back, retests a little bit higher than that. Trading right now at 109.92. We've actually been long since 2018. And one of the reasons is, it's not so much a technical picture. The picture is that we've been long since there. The picture is that the U.S. currency is still the currency of choice. And that's it. I need to have a sip of tea. I don't want to lose my voice. And you can see the lowercase h or m that takes out the left side high and holds there for 2 out of 3 sessions. This is a monthly chart, and it's doing that in the dollar. Says that it could go all the way to the next icon on the left or whatever it is. There isn't really. It's just this doji candle before the 114.78 high of September of 2022. I don't want to go there. I'm just saying the dollar so far is still holding very, very well. All right. Let's go to the EUR USD. This is the euro dollar currency pair. Made a double top peak C1, C2 in the monthly chart. Pulls back and could do 1-to-1 to the downside. At 1.02, it could go a little lower. I'm a little upset because I was about to go to Sydney to go visit my brother in February in Sydney, Australia, and the AUD-USD. Look at that. I mean, really, almost 50% off your dollar. Man, that would have been fun. Anyway, that's the way it is. Let's go to the USD JPY, which is trading quite nicely. It's down 24 ticks at 157.45. Made a peak G. It's under the last high that was made in July. I'll be back in a moment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, thank you, Marty, in the den. I've been following this whole thing with U.S. Steel Corporation. One of the reasons we went was testing the 200-period moving average. Why I'd mentioned it in one of my videos for my subscribers when I went through some of the steel stocks. I'd said when something becomes, well, first of all, there are 2 or 3 things that you've got to take into consideration when you're looking at stocks that have the potential for takeover. One is that once they are in the takeover scenario, they tend to stay buoyant for a long time. As soon as it's mentioned that it's not going to happen and there are no other bidders, you just see a plop, just a drop like crazy, which, of course, you've seen in U.S. Steel. So now U.S. Steel is back because other companies, what was it I hear? What was it? United Steel? I can't remember. 2 other American companies. Oh, that's right. CLF. I remember the symbols usually. Then I have to think of the name. Cleveland Cliffs. There it is. CLF. And another company, Nucor. And Nucor are considering buying U.S. Steel. I got a feeling that is a much greater chance. And then, I don't want to take time today. I'll do it over the next week. There's plenty of time. But a lot of things are happening in U.S. industry to create jobs here in America. And I think we've been speaking about this. I'm not going to take time. Anyway, it's really important. So Cleveland Cliffs trading at $10.31, up 39 cents. A nice move up if it can get to the 10.97 to 11.25 area. In this move right now, it can't take time and get there. It's got to be this move. It's saying, hey, that's something that's going to be favorably impressive to the general community, and that's good. NEU, I think, is Nucor. Is it NUE or NEU? No, NUE. Yeah, look at that. Same thing. They're all horrible charts, but look, this is important. That's what I'm talking about, rolling over. That's the reason why I say to subscribers, as a trade, we put on a trade this morning, and if it works, it's in that area that says there could be other things that are going on right now that are going to give us clues as to what happens January coming into February. Otherwise, we're going to expect a consolidation that rotates and doesn't resolve itself until, say, mid-Feb, something like that. All right, so with that said, a couple of things I wanted to look at here. I had a question about, so U.S. Steel, I think I didn't do it this morning, even though I had heard the news. I probably would have taken, look, it opened at 35.32. It's trading right now at 37.38. I probably would have taken a position in U.S. Steel, because in this environment, you want stocks that have a story, a positive story. This is so far a positive story. And that means that, as for instance, I was showing you this, what was the stock that went up sharp? WHR. So Whirlpool goes up sharply on Friday when the general market was down. That means it had avoided the day of the slump. And now if the market rallies, it can participate. It's resolved the downside. Question about LAES, being very careful with these things. So LAES is Seal, Square, Quantum Computing, down $1.37 today at 436. I don't think these things are out, but for now they are. You've got to be very careful. Give them time, let them rest. 1.94 is the 200-period exponential moving average. I want these in the next phase. I missed the other one. I spoke about it, but I never got in. But they will be in play. And I don't think this is the big play that you're buying now, because in 3 years' time, it's gone from 4 or 5 to 500. These are plays. Later in the year, you might get the kind of position that says, okay, now you could be looking out further. At this point, these are just speculative things, just fun trades, and they aren't fun trades if you don't put in a stop, you don't have a special plan, and you treat them as hot wire. You just don't want to be on the wrong side of this. You want to be on the right side and trade it. All right, so let's get back to our story. And our story is, Basil, hi. Let's get away from tech for a second. Can you please look at Starbucks? Okay, SBUX. I did look at many in the areas that are not tech over the weekend when I had a chance. I was a little fuzzy, so maybe I didn't give them the importance that I should. But there were a number of areas that I said to myself, okay, I'm looking for areas that could benefit. So Starbucks, I have a problem with Starbucks. First of all, I'm not a big coffee drinker. That's not the issue. The issue is I've always missed Starbucks in the sense that I've never got the big moves. I mean, always. I don't think we've ever, as subscribers, had Starbucks as a long. I can't remember. We might have, but I haven't. And it's just down a sideways trading place. So what I would do is, if you're looking at areas that could portend higher prices, Starbucks to me doesn't fit that category. I would like to look at areas, and you're talking about coffee. So what's that one? Coffee Brothers, BRBROS. Let's see, I haven't updated that for ages. Look at that move. You see, some of the area in coffee is doing very well. And that's Brothers, peak A, B, C. It's trading at 55.62. I'd be more favorably inclined to start a small position on another. Well, I don't want a big pullback. If it goes under 53.80, I don't want any position in Brothers on the shorter term. But looking out, peak A, B, C, D in the weekly chart, everything's strong, and D in the monthly chart. Actually, no, I'm going to change that. I'm going to say at 55.69 right now, down $1.52. This is getting intriguing. So let's look at it again tomorrow. But Brothers, what is the actual title? It's called Dutch Brothers. Dutch Brothers Inc. Really doing very nicely if you compare it to, say, Starbucks. So, yep, you brought that up, and I'm saying, yeah. Now, Duncan isn't a public company anymore. But that's interesting. But the symbol DKNG is there we go. There it is. DraftKings, leg A to the upside, having quite a nice move. We have one in the other area. Oh, I got a phone call, but I can't answer. All right. We have it in a different area. We have it in GENI, which is Genius Sports. I like that pattern better, but now I'm beginning to think that DraftKings actually has a slightly better chart formation than Genius Sports, although we're in much lower down, so that's okay. We're in the 6s and it's in the 860s. So, nobody actually asked about that. I just brought it up. Yeah, I like this better. I think DKNG. I might have to consider that we might even rotate into this. No, I need to do more work because the weekly chart is still struggling a little bit. But yeah, this is kind of under the radar in the sports betting. All right, let's do this. I said I would look at the E-mini a little later on in the show. There we go. Okay, so there it is. I said 58. No, I think I said, didn't I say 53? Yes, I said 58.48 was the highest was made back at 1:30 on the 10th, on the 11th. What am I talking about? On the 13th last night. And I want to see 58.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Oh, so let me just sum this up. So I also told subscribers I would show a couple of charts that are very important. So AIQ, which is the AI ETF for the artificial intelligence, daily chart has dropped sharply from 40.65 to the 37s. Look, the weekly chart, although the 9 and 14 are turning down, still very good. And the monthly chart is only in leg D right now. You've got all of January not to get to 40.66 to increase the leg D or to make a peak D if it doesn't do that. So I'm looking at this and I'm saying, I'll go through some of the numbers tomorrow that I'm looking at, support levels, etc. I couldn't do it on my show on the video last night. I needed just to get out as much as possible in the shortest time frame. ARKK, I think ARK Innovation still has some really good action, and I don't see it yet looking with despair. I think it's holding pretty darn well after making a high in the 63s, putting it back to 56, using time more than price. Same thing in the weekly chart. So I'll go through some of these, and I'm just going to the one aspect that really is important at this point is how are we rotating? So is Caterpillar starting to move up? Well, it's a green candle, but look at that horrible action. But it is the 200-period moving average. So we're going to be following this very closely. So overall, I'm looking at this saying we are still in the consolidation phase that I've been talking about since the end of November, and saying that it's going to rotate. And that's exactly what we've seen is a rotation. But now we've got to see strength coming to some of the areas as the really, like the semiconductors, like the ones, and even I'd even say some of the areas in tech. And Apple might be one of those. Where's Apple today? Apple is down sharply. Yeah, Apple can have a bit of a breather. Look at that. But it is a Dow stock. So with that said, it's good to be back. And we're just going slowly here, one by one. I don't see any big reason to get very, very long any new positions. We've got a trading long on right now. It's just a trading long. I might even switch that from a long to a short. But in the meantime, it's important the next 3 days. How do we close? We need to close in the Dow